Hey guys, welcome back to the channel dedicated to helping you earn more, spend less, and invest the difference. So today we're going to be talking about stocks. Specifically, we're going to be talking about fractional shares. Both what these fractional shares are, why they're so great, and where you can buy them. But before we get into that, I'd just like to say that if you find educational content like this useful, if you've learned something from this video, be sure to hit the like button down below, consider subscribing. It really helps the YouTube channel to grow and reach more people just like yourself who are interested in learning about their finances. So a quick recap on stocks just to kind of get everybody up to speed. When a company first goes public and first issues stocks for sale to the general population, they get to pick how many shares, how many times they're going to subdivide their company. So whatever number of shares they decide to issue is going to affect the price per share. Because ultimately, the price is going to be what the estimated value of the company is divided by how many shares they decide to issue. So if they issue too many shares, then the price per share is going to be very low, and that's not ideal. But at the same time, if they don't issue enough, then the price is going to be really expensive, and so that's going to kind of price people out where they just simply can't afford to buy a share in this company. So they're trying to look for that sweet spot, and that works great initially. But over time, the stock price is likely to either increase or decrease, and sometimes it's going to do that significantly. And so when that happens, it can get the price per share out of that sweet spot, and that can cause problems. Now, sometimes a company will choose to remedy that situation by doing a stock split of some sort, but it's not required. So for example, the Amazon company, the last time they did a stock split was all the way back in 1999. And as we all know, Amazon has become ridiculously popular. They're pretty much taking over the world at this point. So the price per share of Amazon at this point is roughly $2,600 per share. So what if you don't have $2,600? What if you only have $500? How can you invest in Amazon if you only have $500 available? Well, historically, the answer is you don't. But thankfully, with fractional shares, you can actually buy sub-pieces, fractions of one share. So let's say that you're able to save $500 a month and you would like to invest this money into the stock market. Historically, if you wanted to buy Amazon, you would have to save for 6 months and save up $3,000 so that you could buy one share at $2,600 and then have $400 left over. And that sucks for a couple of reasons, because what do you do with that money while you're saving it up? What do you do for that 6 months that you're accumulating that $3,000? If it's not invested in something, if it's just sitting in a bank account, then you're not earning any interest, you're not getting any returns on your money. It's just kind of sitting there doing nothing, and that sucks. But you don't necessarily just want to invest in some other company just because you can actually afford this company. I mean, you shouldn't be picking your investments based on what you can afford. You should be picking them based on what is actually the best company to invest in, at least in your opinion. And even once you purchase this one share of stock 6 months down the road, now you got $400 left over that once again is not invested in anything. It's not getting you any return on your money. But fractional shares allow you to invest regardless of how much money you have into whatever company that you're interested in. Now, it's important to note that not all brokerage firms allow for fractional shares. It's a relatively new concept that's been brought about by increased software, accounting software that these brokerage firms use, as well as the general trend of getting away from transaction fees for each individual stock trade that you do. So for example, Vanguard, I love a lot of their products. I love their ETFs. I love their index funds. I buy a lot of Vanguard stuff. But I do not buy that from Vanguard.com. I don't use the Vanguard brokerage account because Vanguard does not offer fractional shares. Instead, I buy these Vanguard ETFs from a different brokerage firm that actually allows me to buy fractional shares of whatever it is that I want. Now, it's important to note with fractional shares that you're buying those shares from the brokerage account itself. These shares are not traded on the open market. So essentially what it is, when you try to sell your fractional share, they're going to combine your fractional share with a bunch of other people's fractional shares until they have enough to make one whole share, and then they're going to sell that share on the open market. And that's important to note, because if you're trying to buy and sell fractional shares of some obscure company that nobody really knows about, if they can't find additional shares to combine and make into one whole share from other investors that are looking to sell their stuff or buy stuff, if there's just not enough trading volume, then your order might sit for a very long time. They might not actually be able to sell that stuff. So it's important to note when fractional shares to kind of stick to the more well-known companies that are traded on a regular basis, as opposed to some of these obscure companies that nobody's ever heard of. So when it comes to fractional shares, there's two brokerage firms that I like to use that offer this stuff, and that's going to be Robinhood and M1 Finance. Now both of these companies have fully functional, full websites where you can see all the detailed graphs and tracking of your investments. But they also have really good apps and mobile device applications. And that's really what they're known for. So it makes it very convenient to do all of your trading on the go. Now Robinhood is great if you're interested in buying specific stocks. So if you wanted to go out and buy Amazon and Amazon only, then something like Robinhood is going to be fantastic. Now M1 Finance does things a little bit differently, so with them you're not going to just invest in one particular company. They're trying to get you to invest more in a holistic, diversified sense. So what they're going to have you do is they're going to have you pick a variety of different companies or index funds or whatever it is, and you're going to set a percentage with each of those companies such that overall everything adds up to 100%. And so then if you were to invest $500 into M1 Finance, they're going to take that $500 and chop it up according to your percentages, and they're going to buy little bits of each of the companies that you are interested in. And that can be nice because, like I said, it makes sure that you're a little bit more diversified. But at the same time, sometimes it is really nice to buy individual stocks if you think that a particular company is going to do really well in the coming quarter or something like that. So I actually use both of these. So if I'm trying to buy a particular individual stock, if I think an individual company is going to do really well in the next handful of months, I'll use Robinhood to execute that trade. Otherwise, for my more generalized investing, to make sure that I stay diversified, I use M1 Finance for all of the other stuff. So if you're interested in getting set up with either of these two companies, I've got links down below. They're completely free to sign up. In fact, it's actually better than free because they're going to give you a free random stock once you sign up and fund your investment account. Now, sometimes the random stock that they give you is really awesome and worth a bunch of money, but more often than not, it's probably going to be somewhere between $3 and $10. But hey, free is free, right? So that's going to wrap it up for us today, folks. What are fractional shares? Why are they so amazing? Because you can buy into whatever company it is that you're interested in, regardless of how much money that you actually have. If you found this video useful, like I said, be sure to hit the like button, and as always, I'll see you all again next time. Thanks.